Stock trading plan and mindset. Here is a simple outline for creating a stock trading plan. Define your investment goals, clearly state your financial objectives, such as capital appreciation, income, or a combination of both. Determine your risk tolerance, consider your overall financial situation and investment experience to determine the level of risk you are comfortable with. Establish a diversified portfolio. Spread your investments across different industries and companies to minimize risk. Conduct thorough research. Research the companies you are considering investing in, including their financials, management, and competitive landscape. Set entry and exit criteria. Determine the criteria for buying and selling stocks, such as earnings reports, market trends, and technical indicators. Determine your investment budget. Allocate a portion of your savings for investment, and make sure to stick to your budget. Monitor your investments regularly. Stay informed about the performance of your stocks, and make adjustments to your portfolio as needed. Review and adjust your plan regularly. Regularly evaluate your investments and adjust your plan based on market conditions and your investment goals. Note, this is just a general outline, and individuals' financial situation and goals may vary. It is recommended to consult with a financial advisor before making any investment decisions. Stock trading psychology. Stock trading psychology refers to the study of how emotions and beliefs influence an individual's investment decisions. Some common psychological biases seen in trading include overconfidence, herd mentality, anchoring, and loss aversion. Understanding these biases and being aware of them can help traders make more rational decisions and avoid common pitfalls in the stock market. It's also important for traders to have a solid investment strategy, manage risk effectively, and remain disciplined, as these factors can also have a significant impact on success in the stock market. Most traders fail for a variety of reasons, including lack of discipline. Many traders make impulsive decisions, deviate from their trading plan, and let emotions guide their trades. Lack of education. Traders often jump into the market without fully understanding how it works, leading to poor decision making. Self-doubt can be overcome through several techniques, including reframing negative thoughts. Challenge your negative self-talk and replace it with positive and realistic thoughts. Practicing self-compassion. Be kind and understanding with yourself and acknowledge that everyone experiences self-doubt. Facing your fears. Take small steps to face and overcome your fears, which can help build confidence and reduce self-doubt. Setting achievable goals. Focus on small, attainable goals that can help build confidence and reduce self-doubt over time. Surrounding yourself with supportive people. Surround yourself with people who encourage and support you, and limit time with negative influences. Practicing mindfulness. Mindfulness can help you become more aware of negative thoughts and reduce self-doubt by helping you focus on the present moment. Seeking professional help. If self-doubt is significantly impacting your life, consider seeking help from a therapist or counselor. Over-leveraging. Using too much leverage or borrowing to trade can result in quick and significant losses. Help others. Acts of kindness can increase your own happiness. Remember, being positive is a journey and takes time and effort. We'll help you be a better trader.